surprisingly bullish forecast coming out of Wall Street. And this was brought to me by Make Gold Great on Twitter. Bank of America projects silver could reach up to $309 per ounce in 2026. So in just 3 quarters.
And the biggest part about it is people like JP Morgan, the big banks, are playing games with it. You know, they sell into the future silver to drive the price down so they can buy it at a lower price and it comes back up again. So that's why eventually the games are about to end when the silver supply ends. And that's why I'm saying $200 silver. And I'm not expecting you to give a forecast. That's my forecast. It's just a guess, really. It's just because I'm a big, fat silver bull. So anyway, what else would you like to add to the reasons for buying silver?
Well, I'm going to give a guess too, which is, and I talk about it in the book, and it's not financial advice for me either, but my target is actually a bit higher. I think we're going to eventually see as much as $300 silver.
Silver could reach $300 per ounce because global demand is growing faster than supply. Physical inventories are shrinking, and AI, solar, EVs, and power grids are consuming unprecedented amounts of silver. Michael Oliver, Andy Schectman, Robert Kiyosaki, Peter Krauth, Mike Maloney, 5 respected voices, different backgrounds, different methodologies, yet all of them are pointing toward a similar possibility: silver at $300 or even $500 per ounce. Coincidence? Or are they seeing something the majority of investors are missing? For decades, silver was viewed as a volatile trading metal. Today, silver is becoming a strategic resource, powering AI data centers, solar energy, electric vehicles, defense systems, grid electrification, and advanced electronics. Meanwhile, global silver markets have recorded multiple consecutive years of supply deficits, while demand continues to accelerate. The real question is not whether silver is volatile. The real question is, what happens when a critical industrial metal faces structural shortages in an increasingly electrified and AI-driven world? Could silver really reach $300? Could it even touch $500? Or is this simply another precious metals fantasy? This is not financial advice. This content is purely for educational and informational purposes. Kindly do your own research. Let's take a deep dive into the data, the demand drivers, the supply constraints, and the hidden forces reshaping the global silver market. The story of silver is no longer about silver coins. The story is about the infrastructure of the future. Most investors still think silver is a speculative metal. The data says otherwise. Silver has now recorded 6 consecutive years of supply deficits. More than 820 million ounces have already been drained from global inventories, and the deficit continues. Meanwhile, demand keeps accelerating, not from jewelry, not from collectors, but from the technologies shaping the next decade. A typical solar panel requires silver. A typical EV requires silver. A typical AI data center requires silver. A modern power grid requires silver, and there is no perfect substitute. Industrial demand now represents roughly 60% of total silver consumption. Electronics alone consume approximately 445 million ounces annually. Solar consumed nearly 198 million ounces in a single year. But here is the kicker. The viral narrative about a massive multi-billion ounce bank short position misses the real issue. The real issue is physical availability. Deliverable silver inventories have been shrinking. London free float inventories are estimated near 140 to 155 million ounces. COMEX registered inventories have fallen dramatically. Physical delivery requests have surged. Lease rates have spiked. These are classic signs of tightening supply. Now look at production. Global mine output remains stuck near 800 to 835 million ounces annually, and roughly 70 to 80% of silver comes as a byproduct of other mining operations. That means higher silver prices do not automatically create more silver supply. New mines can take 7 to 15 years to permit and develop. Supply cannot react quickly, demand can. That imbalance matters. Now let's discuss the $300 to $500 question. Historically, silver has traded at different ratios to gold. Today, the gold-silver ratio remains elevated. If gold reaches $5,000 to $6,000 in short term and silver returns to historical extremes, silver could mathematically approach $300 per ounce. Is that guaranteed? No. Is it possible? Absolutely. Even major institutional forecasts now include scenarios above $300. The biggest question is not whether silver reaches $300 to $500. The biggest question is whether investors understand why silver is being reclassified from a trading metal into a strategic asset. So comment the word silver if you believe the structural bull market is just getting started. Share it with someone who may need it. Follow for more.